please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome, and thanks for joining us on What's Hot. I'm Kritika Saxena. Here are the top 5 stories that we are tracking for you. Well, first, the top story tonight. Fuel prices across the country have touched a record high with yet another sharp spike in prices today. A litre of petrol now costs over 87 rupees in Mumbai. If you are from New Delhi, you will have to shell out over 80 rupees. Across the country, petrol and diesel prices were hiked by 50 paise a litre. This is among the biggest price hike in a single day ever since the government adopted daily revision of prices. The Congress party has called for a Bharat Bandh on Monday. So what can the government do then? Can it afford to ease excise duty? Can the centre nudge states to cut VAT rates? We will discuss all that in just a bit. But first, the United States has threatened India and other countries with sanctions for trade relations with Iran. But India has put its foot down and assured Iran over continuing trade and economic ties. Iran is India's third largest supplier of crude oil. Rituparna Bhuyan is here with the detail. Ritu, what exactly has been communicated by the Commerce Minister to Iran yet?
A day after the 2+2 talks, India has assured Iran that bilateral economic and trade relationship with Iran will continue. This assurance was given by Commerce Minister Suresh Prabhu in his meeting with Iranian Roads and Transport Minister Abbas Ahmed Akondi in Delhi today. In that meeting, according to our sources, Suresh Prabhu told Akondi that while India's bilateral trade with Iran saw a robust growth to around $14 billion in FY18, he actually proposed to increase this bilateral trade level to at least double that of what was seen in FY18 in the next 5 years. Mr. Prabhu also maintained that relationship with Iran, India and Iran, that is independent of Indian relationship with any other country, and that that economic opportunities in this bilateral relationship that should be leveraged. Mr. Prabhu will also be meeting his Iranian trade counterpart in a meeting in Tehran later this year. He will be attending the International North-South Transport Corridor meeting in Tehran, which is scheduled, which is likely to happen in October, either in October, November, or maybe in December. In that meeting itself, in the sidelines, Mr. Prabhu is likely to meet his trade counterpart and take forward trade-related issues with Iran.
Okay, so Iran has been given an assurance yet, but what about the spiraling fuel prices back home? What are the options before the government here? Prashant Nair is here with more. Prashant.
Let's begin with VAT this time. So this is essentially sales tax which state governments collect on fuel which is sold, and we look focusing just purely on petrol and diesel. The table will come up on your screen, which basically tells you the top 10 states in terms of VAT rates. Now, unlike excise duty, which actually is a fixed number, I mean, it doesn't vary. The VAT rate, the sales tax rate actually varies from state to state. So, I mean, in a state like Delhi, for example, I mean, Delhi actually is one of the states which has affected VAT rate cuts on petrol and diesel, and it is on the lower side. But then you've got big states like Maharashtra, where the VAT rate actually is quite high. So the table will come up on your screen. Maharashtra is the highest, has got the highest rates of VAT on petrol and diesel currently. I mean, the rates vary for Maharashtra. There are 2 rates in Maharashtra. One is Maharashtra, which includes Mumbai, Thane, Navi Mumbai, and then there is the rest of Maharashtra. But I mean, on both counts, Maharashtra would figure right on the top. Then you've got Madhya Pradesh. It's followed by Andhra Pradesh, Punjab, Telangana, Tamil Nadu, Assam, Rajasthan, Kerala, Karnataka. The interesting point is, we've been hearing the central government and officials saying that we will ask states to cut VAT rate. We've got 19 odd states in India currently ruled by the BJP or BJP alliances. 4 of these 10 states, which essentially are the highest VAT collecting states in terms of percentage rates, are ruled by BJP or BJP and alliance partners. 4 out of the 10 are BJP and BJP alliance partners. So, I mean, that I thought was something interesting. We've not seen states follow up on the centre saying that we're going to urge states to cut rates. So that's point number 1. The other point is excise rates, and this is, the table again will show you exactly where we stand. As fuel prices fell when this government came to power in 2014, I mean, for 2 years straight, fuel prices came off very, very sharply. the government, in order to sort of, collect the same amount of excise or actually a higher excise, increased sort of excise rates quite a bit. So in FY14, you had 3.5 rupees, which the central government used to collect on diesel, 3.5 rupees a litre. That at the peak went to about 17 rupees and 30 paise. We've only seen a 2 rupee cut on excise rates on both petrol and diesel over the last 4 years. For petrol, that number is about 10 rupees a litre, which the central government used to collect, and that number now stands at almost 20 odd rupees or so, after this 2 rupee cut that I'm talking about. So, I mean, the numbers speak for themselves. The total mop-up is on your screen, and look at the increase we've seen. In the case of state VAT, forget the absolute numbers, although the absolute numbers also add up to quite a bit. In FY16 over 15, there was a 4% increase. In FY17, there was a 16% increase. In FY18, there was an 11% increase. This is what VAT is contributing to, all states combined. I've taken these figures from PPAC, which essentially tracks everything related to oil and gas. You look at the centre's excise collections, and also there we've seen a very, very big increase, and that is reflective of the government taking the rate of excise on both diesel and petrol per litre substantially higher, multiple times. So in FY16 over FY15, centre's excise collections jumped 80%. This is the number which, critics point out. When fuel prices were falling, you ramped up excise rates. Now when fuel prices are actually going higher, why don't you pass on the benefit of this to the consumers?
Okay, Prashant, thanks for that detailed analysis. But let's talk about the big macro story of the day. Current account deficit in the first quarter of financial year has risen only by 5%. Now, this is largely thanks to Indians living abroad, whose remittances have seen a sharp 17% rise. Trade deficit has widened by 9%, and RBI's reserves have depleted by over $11 billion from April to June. Lata Venkatesh is here with the details. Lata, put this into perspective. What does this mean?
Well, I would first of all want to point out that the current account deficit is not a problem in the first quarter. It's come in at 15.8 billion compared to 15 billion year ago, same quarter, 2.4% of GDP. Not alarming. But look at the number, 15.8. Largely, it is a small number because you had a very good private transfers. That's the big positive. About 19 billion, 17% rise from year ago levels, Indians living abroad and sending that money into India. The negative really is the trade deficit. The trade deficit is 29.9 billion compared to 26 billion year ago. Now, 29.9 billion is April, May, June. July alone, our trade deficit is 18.02. So watch, if it is 18 for every one of July, August and September, second quarter will be 54 billion compared to 29 billion in the previous quarter. That is what we have to worry about, not the trade deficit of the quarter gone by, but the trade deficit of the quarter that we are living through. We only have to hope that the rupee depreciation will increase exports and reduce imports, and we will not have a blowout 18 billion month after month. If we can restrict it to 1 or 2 months, we would be home. Coming to the current account deficit, coming to the capital flows, whatever the FDI gave us, 9.7 billion, was taken away by FPI for portfolio outflows. So net, we actually, our reserves reduced by 11.3 billion because the capital inflows were not enough to cover the current account deficit. Now we will have to see how we figure in the second quarter. Again, it's net outflows. FDI is coming in, but portfolio outflows are continuing. We will have to see a reversal of portfolio flows, either because the rupee is so cheap and India remains a growth story. Otherwise, we will continue to deplete our reserves. So those are the two red flags I want to point out. Trade deficit and this continual outflows on the portfolio account. If that were to continue, the reserves would start shrinking. We have enough reserves. We have $428 billion of reserves. But shrinking quarter after quarter is not a happy experience.